Hi guys, welcome to this video. So if you are new to trading Forex or an intermediate trader and you want to know why you keep losing trades, this video is for you, okay? So stay tuned. Okay, so the key to successful trades is correct analysis, okay? So let's start, okay? So first go to tradingview.com. On the website, you go to products, go to super charts, okay? So once you're in the super chart, this is where we'll be doing our analysis, okay? So like I said before, the key to a successful trade is in a successful or proper technical analysis, okay? Okay, so in our super chart, I'm just going to click on the currency pairs or the pairs or the symbol search, and then I'll search for BTC USD, okay? And you see a bunch of results pop up. Now, all of these are the charts for Bitcoin, US dollars, based on these brokers, because all of these brokers you see, they partner with TradingView, okay? So basically, they are all the same thing. Okay, you can actually just check for Bitstamp, Coinbase, Index, crypto. You can check the charts to just be sure. You can check the candlestick readings to just confirm they are basically all the same thing, but this is for the companies that partner with TradingView, okay? But in our case, we're just here to do analysis on TradingView because we're trading on Meta 5 and I use access markets and deriv, okay? So especially for crypto, I use deriv, right? So once you've opened the Bitcoin US dollar crypto chart, currently we're in the 15 minutes time frame, okay? Currently we're in the 15 minutes time frame. So I just wanted you to know that all of the BTC USD pairs you're seeing there, they're all the same thing. It's the same chart, okay? I'm just trying to show you it's the same chart for all of them. So you just want to, if you have if you are using any of these brokers, you can actually just go to that broker, okay? But if you are not, you can still just click any of them. I think they are basically the same. You can just read the candlestick, you can see they are basically the same. All right, so I'm just going to choose Bitstamp. Let's use Bitstamp. Okay, so to start our analysis, first things first, we want to do is go into the daily time frame. Okay, currently we're on the 15 minutes time frame, and you can see I already customized my time frame. I already set the daily 4 hours, 1 hour, 5 minutes, my favorited time frame, and I'm just going to favorite 3 minutes time frame, and you can see the 3 minutes time frame is automatically added there. So now I have the 3 minutes, 5 minutes, 15 minutes, 1 hour, 4 hours, and daily time frame to do the analysis, okay? So first thing you want to do is go to the daily time frame. That is how you start to do technical analysis. You go into your daily time frame and then you try to look at the market movement. You want to see if it's bullish or if it's bearish or if it's ranging. So for BTC USD, which is Bitcoin USD, currently, if you look at this daily time frame, you can see at the moment the market is bearish, okay? It is on a what? Sell, okay? It is a bearish, it's on a sell, it's short, okay? So first thing you want to do is place your trend line in this chart, okay? So I've already done all the analysis for this on Meta 5. I'm going to show you and I'm going to show you the results, okay? But this is trading view where you do professional analysis as a professional trader, okay? So first thing you want to do is place a trend line. All right, to do that, you just need to go to the left side of your screen and you will see that diagonal line. And then you choose, click on it, and then you see a bunch of tools. You want to choose the trend line tool. Now, using your mouse, you click on the highest point, that is the highest low of your chart. Look for another highest low on the market movement. Now, you can see what I'm doing. Place it on the highest low, the closest highest low in the day trend line, then look for the next highest low, then place it. Okay, now these 2 points where you placed it, where they contacted, are called bounce points. Okay, so now we have one bounce, two bounce, that's one bounce, two bounce, and then what you notice is the third time it did not bounce, instead it went through the trend line. Now this is what is referred to as a fake out. Okay, now during fake outs, this is where you want to be careful in trading, because right now it looks like the market is going to be bullish, but actually the market is going to go back to being bearish. It's going to go back down, okay, because this is a fake out. It went through the trend line. All right, at this point you want to proceed as a day trader. This is not scalping. You have to do analysis. You then go to the 4 hours time frame. You look at the candlesticks. You can do analysis, mark demand zones, mark supply zones. You can go to the 1 hour time frame, do more analysis, mark more demand zones, mark more supply zones, or you can even go into that 1 hour time frame and look at the candlesticks to understand better, and then go into 15 minutes and execute, or 3 minutes, or even 5 minutes. Okay, like I already explained to you, this market is still gonna go bearish. It's still gonna come down, cut back through the trend line, because this is a fake out. Okay, so what you're gonna be doing on this trade is you're gonna be selling. Okay, you're gonna be going what? Bearish. You're gonna be doing what? Short. Okay, all these terms can be used, they can be used interchangeably, they mean the same thing. Okay, short, sell, bearish. Okay, anyways, so back to the trading. You go into the 1 hour time frame, you see more candlesticks. Okay, and you can understand the movement of the market better. Okay, now if you go into the 15 minutes time frame, you will even see more candlesticks. Okay, now in the 1 hour time frame and 4 hour time frame, you can mark demand and supply zones. Okay, depending. Okay, I already made a tutorial on how to mark demand and supply zones. You can mark them, but in this case, what we're going to be looking out for is candlesticks movement. Okay, and the candlesticks in particular. Okay, because there are 3 types of candlesticks, just so you know. There's strong candlesticks, there's the indecision candlesticks, and then there's the control shift candlesticks. Okay, so in most cases, before you enter trades, you want to look out for strong candlesticks, and I'll explain what strong candlesticks look like. Okay, so in case of this trade, we're going to go what? Bearish. We're going to sell. We're going what? Short. Okay, so you want to look for strong candlestick. Okay, so you can see there are 3 types of candlestick I already explained to you. Okay, so I'll make a separate tutorial for what candlesticks are, but in this case we're going short. So for you to mark your long and your short position, you'd have to go to the left side of your screen, and then you see that L with those horizontal lines. You click it, and then you choose short position, because we're going on what? Sell. Okay, short position, because we're going on what? Sell. So at this point in the 15 minutes time frame, I can actually mark my entry points using that sell, using the short position. I can mark my entry points using the short position, and then mark my take profit, mark my stop loss. Okay, so like I already explained to you, you want to look out for the candlesticks. Okay, so in this case, where we're going on a sell, you'll be looking at the red candlesticks. Okay, your bearish candlesticks, and you'll be looking out for strong bearish candlesticks. Those will be good entry points for you. Okay, don't enter a trade if a candlesticks looks like an indecision candlestick, or it's shifting. Okay, it's been rejected, like candlesticks that have rejection. No, look for strong candlesticks, they enter the trade. Okay, now you can see where I marked my entry point. Right now I marked my entry point there. Okay, although the current candlestick in this 15 minutes time frame is green, so that's a bullish candlestick. That's a bullish candlestick rather. That is not a good entry point. Okay, you want to wait for a red candlestick to appear, and then you look at the candlestick. If it's a strong one, it's a good point to enter the trade. Okay, because generally, based on our analysis, this market is going to go back to being what? Bearish. Okay, all right, so I'll just place my short position carefully, and you can see my risk reward ratio is 1 to 2. Okay, so yeah, with this you can see the stop loss is at the top, the take profit is below. Okay, now I'll proceed to gold. Okay, so go to your symbol search and you search for XAU USD. Okay, so this is a gold. So you just choose gold for window, and then it's gonna bring up the gold chart. Okay, so you can see the gold chart. Then first thing you want to do is go to the daily time frame. All right, in the daily time frame, you want to first of all determine what movement the market is moving. All right, so if you look closely, you see the market is currently bearish. Okay, in other words, it's in a downward movement. Okay, so it's in a sell position. So first thing you want to do is place your trend line. Okay, very important. So go to the left side of your screen, choose the trend line. So now look for the highest low, the next highest low, ensure they connect, and then drag the trend line across. Okay, and then you can actually just stop it at this point. Okay, that's a good position. Okay, now when you look at this trend line, what do we have? We have one bounce point, two bounce points, and then the market just goes back down and it seems to go up a little bit, and it looks like it's going to go back down. Okay, so obviously because the market is looking bearish right now, it's going to keep going bearish. Most likely at a point it's going to go bullish and most likely make another bounce or possibly a fake out. But right now, based on what you just see, the market is going to be what? Bearish. It's going to still stay bearish. It's still going to go on a sell. So that is why you need this trend line. It kind of determines your first move. Okay, so we can go into the 4-hour time frame to do a little more analysis. Okay, so if you go into the 4-hour time frame, you see more candlesticks because each of the candlesticks is 4 hours, not one day. So you see more candlesticks. You still see the trend line, and you will see the bounce points. Now you can look at the market in the 4-hour time frame. You can actually now mark out a demand zone and a supply zone, and in this case I want to mark out a demand zone. Okay, because you can see the market actually dipped till this point, and then it took a sudden rise. So to mark that, I'm gonna use the rectangular tool. So you go to the paint tool, click it, and then go to rectangle, choose rectangle. Now you're gonna just draw a rectangle at that point. So this point is the demand zone. So this is where the market kind of went back from being bearish to going back up, being bullish. Okay, demand came in. Okay, and then I'm just gonna have to mark that demand zone or reference it, the demand zone. Okay, so the reason I'm referencing this zone, the demand zone, is because you can see the candlestick is moving towards it, and my hypothesis is if the candlestick gets there, it will probably go back up. Or so if it gets there, and if it doesn't go back up, if it crosses through, then it's probably still going to keep going down. Okay, so you see that's why you need to mark these zones when you're doing your analysis. It helps you understand how to take trades. Okay, so when you go into the 15 minutes time frame, which is where you'll be doing your execution, you'll see even more candlesticks. Okay, now take note as to how I'm able to zoom in on the screen. I use my cursor, my mouse pad, to just zoom in, and then I can actually just use my mouse on the right side. You can see those numbers to drag across and just increase the length of the candlesticks. Okay, to zoom in, just zoom in with your cursor pad. Okay, so now you can see more candlesticks, and this each candlestick is 15 minutes. Okay, so currently you can see the market has been bullish, okay, for the past probably 1 hour. Okay, it looks a little bullish. Then it took about couple red candlesticks. So now based on our trade, okay, if we're to enter a trade, let's say I'm looking for a really good point where I could have entered a trade. Okay, I'm going to show you exactly how it works. Now each of these candlesticks, there are different types. Okay, there's the control shift candlestick indecision and the strong candlestick. I'll make a separate tutorial just so you understand. So I'm going to mark my short position, okay, because we are going on a sell. Okay, we already did our analysis. So say I want to mark my short positions from there, because that is a strong bearish candlestick. That candlestick you see is a strong bearish candlestick, and you can see that is where it seems to basically close. So I'm just gonna mark my entry points very close to where it's closed, and then take my take profit all the way down to the next bearish candlestick. You can see the lowest point before it went bullish again. Now you can see my risk reward ratio is about 4.5. Okay, and you can see the stop loss I set, and you can see how the market moved. You can see how many bars. You can see the points. You can see the peak movement. You can see the bars. That is the number of candlesticks in this particular time frame it took from that point to get to this point to hit take profit. Okay, so now based on the analysis, you can see even if you had gone in on the sell at that point, you hit take profit at this point. Okay, all right, let me just show you guys one more thing before I end this tutorial. So you can see your stop loss, your entry points, and your take profit. So I'll just go back to the daily time frame. I want to show you guys something which will benefit you guys in the future or even currently, because you can actually just use this chart. So I'll go to the daily time frame. Okay, and then I'm just gonna drag that down, zoom in, okay, to give more room so we can see the whole chart. So just look at, I'm dragging. I just drag through that ruler basically and then zoom in on the screen. Okay, so I already put my first trend line. So now what I'm doing is I'm going to put another trend line at the bottom this time. Okay, so I'm going to put on that trend line at the bottom this time. So what you notice is this market is already forming a pattern. Okay, so when you're trading, you want to look out for patterns like this. Okay, so you can see there's the highest low, there's the lowest low, highest low, lowest low. Okay, and then I already marked the demand zone, and you can see the candlestick is moving towards the demand zone. If it crosses through the demand zone, it's most likely dip, and then you can be sure it's most likely going to dip to a point close to the trend line. Okay, so if it crosses the trend line, that's another indication. It could be a fake out something, or if it bounces, it could just go back to being bullish, go back up and go towards the original trend line. Okay, so this is just my own analysis. Okay, so I've come to the end of this video, guys. Make sure you hit that subscribe button, turn on post notification so you don't miss my next video. Bye for now.